Hey guys, it's Matt here. Wanted to do a follow-up video on my previous video, which was a review of, let's see, actually, review of this gentleman, JDub Trades, who had a video that popped into my feed about making $500 a day uh, on a strategy that was basically an opening based on the opening range. It was a kind of a breakout and retest strategy. So in other words, you set up your opening range, you break out, you retest it, you go long here, and then you expect it to go that way. Or he was also saying if it breaks out to the bottom and retest, then you go short. So in his video, he back tested using air quotes. He back tested for a week, which is meaningless. And so I wanted to just make a video of a real back test, show you what that looks like, and go through some of the results really quickly. I want to show you the code that I use. Um, Hat tip to Day Trading Zoo on Twitter, who not only shares some code snippets from time to time, but also did like a webinar in a chat group I used to be in. And so some of this code is actually his. Like he gave it to us. I was like, here, just use this, idiots. Which is great because I'm not a coder. So I learned just enough to be able to test stuff. So this is in Python, and it talks to Polygon.io and grabs data from there. You can probably grab SPY data from other easier places, and then just manipulate it in Excel. Uh, it's easy enough to do, but I use this because I'm familiar with it now, and it allows me some flexibility that I really like. So, and then once I have the data, this is the data, or sorry, this is the code to test that data. So basically, this is all the if-then statements that decide, like, okay, does the price go above the opening range high? If it does it pull back to the opening range high? And then then we get long and what our position size is and all that. So and then it exports it to Excel and an Excel spreadsheet, and that's it. So okay, cool. Enough of that. Couple terms that I want to go over really quickly that if you don't know these, it won't make any sense. So first, opening range high and opening range low. If you don't know what those are, it's just the high and low of any opening range you choose. I chose the 5 minute charts. So basically, the first 5 minute candle that forms, you take the high, you take the low. Those are your opening range high, opening range low. The offset, this is a term I made up for this purpose. That's the amount in percent that you have to go above the opening range high in order to trigger a setup. So it has to break out above the opening range high a certain amount based on the percentage of the price of the opening range high, and then that can be a valid setup. Okay, so if we look at this chart, I'm talking about this is the opening range high. It has to go a certain percentage above this to say like, okay, yep, triggered. So now if it pulls back, we can take an entry. If it doesn't go up, break out enough and it pulls back, it doesn't count. It has to go a certain amount of distance. So in JDub's video, he never quantified that. So I had to kind of just quantify that on my own. He just said, well, if it goes up a good amount. I don't know what the fuck that means. It means nothing really. So I just needed to quantify that. And so the quantities I came up with were these are in percentages, and there is a typo right here. There should be an extra zero here. So this would be 0.08%, 0.1%, 0.12%, 0.15%. Um, so uh, anyway, we'll maybe take another look at that later. But the kill switch, this is what I call whether or not a break of the opening range low. This is all assuming a long base strategy, and we'll get to why that's the case. But so if we're looking to go long, if a break of the opening range low before a break of the opening range high kills the setup, okay? So let's pretend like instead of this breaking out to the top right away in the next candle, let's say it bounced and took out the low and then bounced back up here and took out the opening range high. That excursion below, if that kills your trade, if any excursion below, you just say, okay, trade's off, no dice, even if it returns and does the normal setup. So that I call the kill switch. The clearance is whether or not an entire candle needs to form above the opening range high to trigger a setup. This is actually a really good example of that because this would be the clearance candle, right? Um, so basically, the entire candle, including the wicks, is above the opening range high. rather than a candle like this where maybe it reaches the excursion that it needs to get up here. The offset, offset's not a great word, but it's what I'm using. So it reaches that target there, the offset target, but it's not. There's no candle that's above that's completely above yet, right? Until this one gets put in. Maybe that matters, maybe it doesn't. I honestly lean towards it probably shouldn't matter for a setup. Like there's really no reason, like good hypothesis of why this would make a better setup. This candle being here, if the price goes up and then it comes back, if it hits high enough and it comes back and touches your entry, then get in. But you never know when you test this stuff. So I wanted to make sure that I tested it anyway. So that's clearance. Target multiplier is just the number of R that the target is set to. So this is a very simple test of not taking profit at different levels, but instead uh, taking profits just and one entry, one exit, right? So basically, this is 1R because your risk, if you get in here at the opening range high, would be your opening range low. That's the risk. And so, profit targets were either 1R, 2R, 3R, 4R. Okay. That's pretty easy to understand, I think. Cutoff time, the time of day after which an entry is no longer valid. I tested 10, 10:30, 11, and 12. And then the dates I had were from the beginning of 2022 to basically current 6/15/24. This uh, also includes, so when I tested, I did just the year 2022, just the year 2023, just this year. And then I did like 22 and 23, 23 and 24, like all of those plus the whole time period. So you'll see in a second when I pull up the data that yeah, actually, let's go to the data now. I don't think I need this chart just right. Just to be clear, guys, this is a loss, right? Because this basically like breaks out to the high, depending on where your offset excursion target is there. This hits it. Plus, there's a whole body candle, right? There's clearance candle, and then it comes back and touches. So you would enter right here, and then you would get stopped out promptly on the next candle right there, and then it tanks. And then, of course, because SPY is SPY, it comes back at the end of the day and makes it a positive day, right? Because that should happen sometimes when the market wants to keep going up. So let's look at the datas. So this is what the spreadsheet looks like, guys. That it pumps out at the end. So you can see there's like over 1,000, almost 1,500 iterations of uh, of testing all of those different variables in every combination, right? So what I mean by that is like it tests each one of these, which with each combination of everything after that, right? So it tests this 0.08% offset with the kill switch on and the kill switch off. And then in each one of those, it tests the same with clearance on, clearance off. In each one of those, it tests each target multiplier. It tests each cutoff time plus the different date ranges, right? So that's where you end up with just an absurd amount of data. And I've already culled this a little bit actually because I took out anything with negative edge percentage. So really quickly, we'll go through these. EG is expected growth, edge is edge percentage. Um, I'll skip over here really quickly. Stake percentage here. So there's a pretty good article or set of articles on Chris Verma's website. If you guys know him, he's like a small cap day trader. But he's got a great set of articles on how to figure this stuff out, expected growth, edge percentage, using the Kelly criterion as part of like how you grow your account. Um, it's not necessarily something I use too much anymore, but when I'm testing, I do like expected growth as kind of an easy proxy to see, all right, like what are we looking at here? So edge percentage is just do you have an edge or not? And there were a bunch of negative edge uh, outcomes, and I filtered those out because I didn't want to look at those. And so, yeah, anyway, you can see the data. So let's, oh, I don't need to go through the rest of these. I think you can probably figure them out. Average loss, average win. These are the variables, clearance, cutoff time, kill switch, the offsets, target multipliers. So then this is basically your total, total trades, wins, losses, targets, stops, and then your win rates. And I haven't formatted any of this, guys. So yeah, it goes out to 7 decimal places or whatever. But again, this wasn't meant to be like a here, I did everything for you and these are the results. It's more just to kind of show you what it looks like to do a real back test. It takes some fucking work, guys. It's going to take some work and some time. The code was somewhat ready, but had to be adjusted for this thing. So that took some time, and then it's got to run, and then you've got to go to Excel and look through it. So you can see these are in percentages, right? So this is actually like an expected growth of 132, which is it's kind of nice, but it's not realistic because there's only 4 trades, right? So you can see that that was just this year, and then these variables, it's a pretty high, the highest offset I ran. So it really culls the list, but it ends up being the expected growth is that high just because uh, there's not a lot of samples. There's only 4 trades, and 3 of them were wins. So of course, it's going to look like an amazing system. This is basically the equivalent of what JDub did in his video. It's like, oh my God, look how fucking awesome this is. It's like, dude, there were only 4 trades. It's not that awesome, right? Okay, so what we really want to do is look for what I would do is look for total trades, right? And anything in this single digits, like even if it's just even if it's just for this year so far, like do you really only want to take 6 trades in 6 months? I mean, maybe if you really have faith in it, but the problem is for a back test, that's not nearly enough data. Um, Here we get some that have 14. Okay, and by the way, these are ranked by expected growth, so that's why I'm kind of just going down and looking for the first ones. So this one has 47 total trades. So let's look at that line really quickly, or these lines, I should say, because there's a couple of them. So this is just for last year and so far this year, right? So 2023 beginning to current, different cutoff times. You see, it's still the highest offset, which seems to be that's interesting, right? Because what we're seeing, excuse me, guys wrong chart. What we're seeing is that the higher this goes and then pulls back again, maybe that's important. Maybe it needs to go higher, right? So we need a higher offset target here, possibly, right? We can test that later. We could test a higher offset than this 0.15%. We could 0.2% and see what that gets us. So anyway, we'll keep looking because I'm looking for ones that let's find one that has like a couple hundred total trades, right? Here we get up into the 50s, but again, and we're already down to like a 4% expected growth, right? So I usually look for like 3% and above when I'm looking for strategies that I feel are viable. Uh, Again, it's just kind of that like first initial step for me. And then if we keep scrolling, we're down to below 3% EG already, and uh, we haven't hit anything more than what, like 50 some trades, 59. I haven't seen anything above that. Here's 68, but we're down into 0.02 already. So basically, what that's telling us is that we're not getting huge sample sizes that are revealing an expected growth that's maybe worth checking out. So here's some 95s, 95 total trades. Uh, Here, just a couple of those. Um, you know, we're talking about 1% per trade growth, which honestly, 1% per trade average is not bad, but it's just, again, with a small sample size, and 95 trades is still relatively small, I would say. I'd like to see a couple hundred samples, but anyway, your mileage may vary. It depends what you have faith in. You can see the win rates are 30% here. Mostly in the 30s. There were a couple here where, oh, look at that. So it's like a 60% win rate. Um, it's pretty interesting. Okay, so I don't know that we need to keep looking through this, guys. Look, I'll just give you some take home points here. Uh, so I'm gonna not go in order here because first I'm gonna when I did the initial test, which was just like kind of a manual test, still with the code, but just like a couple of years. The short showed no edge at all. Um, and in his video, he specifically said you didn't need to have a bias. You could go long or go short, depending on which direction it broke out. I did not find that at all. Mostly because I think I have a SPY chart pulled up here, right? I mean, this is just from last year, but do you really want to be going short anytime in here? I don't. Why would you be shorting? Maybe you could argue like, dude, just short through here. You wouldn't know this is a real downtrend until you get down here. And at that point, it's bouncing and you're going high again. So don't give me that shit. It's easy to see trends in hindsight, right? But uh, anyway, short didn't show any edge. 2022, the entire year, even when I culled it for just going long, absolute dud, no edge to speak of there for the most part. Um, well, I just thought of one more thing I wanted to go over in the data. When you're looking at data like this, what you want to see is you don't want to see like one specific set of criteria. Like, okay, it has to be this offset with the kill switch on and the clearance on and this one cutoff time in this range of dates, or else it doesn't work. What you want to see is like, okay, so, you know, with the kill switch and the clearance on, doesn't really matter what cutoff time I use. A variety of offsets and target multiples are helpful. Like you kind of want to see a trend that's not very specific, right? You want to see a general theme of like, ooh, this is profitability here. Um, because if you get too specific, then it's sort of like maybe you're just kind of mining for that one really specific thing that just happened to work in your backtest period, and it doesn't actually lend credibility to it being a strategy that will perform going forward. It was just kind of you sort of curve fitted, right? You looked at a set of data for a certain time period and you said, okay, this I'm going to engineer these criteria so that it shows me a profitable strategy, and that's not what you want. You want it to be more general than that. I hope that makes sense. So uh, again, here overall, the number of plays were low even in the good years, 23 and 24. Uh, $500 a week. I actually didn't realize he said $500 a day. Uh, Dude, there were some weeks that you didn't even have any trades trigger with this system. Again, in the way that I quantified it, because he didn't quantify certain things, so I had to in order to backtest it. Uh, with every backtest like this, you could always say too, like, well, maybe my discretion of entries would help the system, and maybe. Although I find that a lot of times discretion will hurt a system because your stupid human brain will want to do things that don't make sense because of emotions. And so I don't know. Your mileage may vary, but uh, my thoughts are this may be a decent system in bullish environments. Although at that point, like if you're just looking for something like I just want to go along in bullish environments, I mean, I think you could probably get easier than all of these criteria, right? You could just do opening range high breakouts, right? Just do that and have tight stops, um, and then hopefully let your winners run. Which the next bullet is, I think this could serve as an entry system of a swing trading strategy, right? So you look at the data and you see like, total trades are pretty low. But if you're holding these trades for multiple days or even weeks at a time because you got a hell of an entry, right? I mean, if you think your risk here is, let's see, let's call it $1. It's not quite, right? From 524 down to 523. We'll just say it is, right? Let's say that's your risk and you pretend it's not this chart, pretend it's a winner, right? And it starts drifting up here. And so now at the end of the day, you're already, let's say, up 1, 2, 3 R. Let's say it closes around this 527 area, right? So you got in at 524, it closes at 527. If you hold that for a swing trade and you end up catching one of these runs, holy Jesus, man. I mean, I don't know what your trailing stop system or whatever might look like, but God damn, you could make a lot of money, right? You could be 20, 25 R by the time you're done. Wow. I mean that makes a big difference. So and it also, who cares at that point then if you're getting in, getting out every day and only, scalping, like the hell is scalping if you're holding swing trades that are working out like this. Again, we're looking back at a period here where it would have worked really well, right? Hindsight is 2020, right? So anyway, I do think though that this system of entry or something similar to it could be good entry system for swing trading strategies. In fact, that's not something that I made up, right? I mean, that's basically what Kulamagi does, and for his swing trading, right? He would just basically take a stock that's in a uptrend and pulling back, and take a 5 minute or 1 minute or 5 minute breakout and then ride it for as long as he could. So overall, I think this was worth testing for multiple reasons. I think it was worth it because like I said, it could be a usable entry strategy. And there are some other things you could tweak too and test it yourself. Uh, it was also worth testing because I felt like the claims that JDub made in his video were pretty substantial. I mean, saying you're going to make $500 a day, which again, it depends on your account size, and I go over that in my last video. I'm not going to harp on that too much, but it doesn't mean anything to just say you're going to make $500 a day. Um, but yeah, it's definitely not as profitable as promised. He did say at one point, I think it had a 50% win rate. We didn't really see that in the data, um, especially if we included shorts. The win rates were terrible. Um, but anyway, so I think one of the other things that I didn't put on the slide is that it really the trend is your friend, right? Even if you're going to scalp, it seems that going scalping long in long environments works really well. And if you're not doing that, if you're trying to go short in long environments or long and short environments, you're probably going to get cut up pretty hard. So anyway, guys, that's it. I'm not going to babble on anymore. I hope this was helpful. Sorry you didn't get to see my beautiful face. And oh, I wanted to thank all of you if you're still here. The people that watched the last video, that's actually been my most watched video so far. And that feels fucking amazing. I appreciate the viewership and the comments that came in after that one. A little bit of cool discussion there going on with some of you guys. So appreciate all that, and hopefully more to come.